A company is the most valuable company on earth. Not Apple, not Microsoft, not a bank. A company that makes chips. In 2016, NVIDIA was worth $32 billion. Solid company. Mid-tier car brand territory. Today, mid-2026, it's worth $5.4 trillion. That's more than the entire GDP of Germany. For context, Germany makes cars, pharmaceuticals, heavy machinery, and chemicals. Millions of workers, decades of industrial output. NVIDIA makes chips. So, what happened? One thing before we get into it. I cross-referenced a bunch of sources for this one. If something looks off, drop a correction in the comments. Part 1. Origin Story. 3 engineers at Denny's, 1993, San Jose, California. A Denny's diner. 3 engineers sit down with coffee and a plan. Jensen Huang, Chris Malachowski, Curtis Preem. None of them are thinking about artificial intelligence. Nobody is. They have one idea. CPUs, regular computer chips, aren't built for graphics. Every time you render a 3D scene, a CPU has to do it step by step. It's painfully slow. Their bet? Build a chip that does graphics in parallel. Thousands of calculations at once. They call their company NVIDIA. They go home and start building. 3 years later, they almost die. 1996. NVIDIA is working with Sega on a new gaming chip. The chip comes back from testing. The verdict from Sega's engineers: technically poor. Jensen Huang has to lay off nearly half the company. He then does something either very brave or very desperate. He goes back to Sega, talks them into paying for the old contract, uses that money to fund a completely new chip from scratch. It works. Barely. NVIDIA survives. Jensen Huang is not a genius from day one. He's a survivor. Fast forward to 2006. NVIDIA releases something called CUDA. CUDA stands for Compute Unified Device Architecture. The name doesn't matter. What matters is what it does. CUDA let programmers use the GPU for anything: scientific simulations, weather modeling, and eventually, training neural networks. Nobody cares. In 2006, the AI research community is tiny. Maybe a few hundred serious researchers in the world. CUDA is a solution looking for a problem. NVIDIA keeps funding it anyway. For 6 years, they pour money into a product that almost nobody uses. Then 2012 happens. Geoffrey Hinton, one of the most important AI researchers alive, trains a neural network called AlexNet. He uses 2 NVIDIA consumer graphics cards to do it. The GTX 580, $500 chips, the kind gamers buy. AlexNet enters a computer vision competition. It wins, by a margin so large that every other team stops and stares. The AI research world has a collective realization. Graphics cards are the engine for deep learning. And CUDA is already there. Nobody else has anything close. Then 2022 arrives. ChatGPT launches on November 30th. Within weeks, every AI lab on the planet is trying to buy NVIDIA chips. NVIDIA already has the chip, the H100. Already has the software, CUDA. Already has the integration with PyTorch and TensorFlow, the 2 frameworks every AI team uses. Nobody else is ready. NVIDIA's stock goes up more than 100 times in 3.5 years. That's the story most people know. Here's what they miss. Part 2. What NVIDIA actually sells. Revenue breakdown. Ask anyone what NVIDIA does. They'll say, graphics cards, gaming chips, the thing that makes your game look good. That's not wrong. It's just about 10 years out of date. In 3 months, NVIDIA pulled in $81.6 billion, up 85% from a year earlier. And in that quarter, NVIDIA changed how it reports. 2 buckets now. Number 1, data center, $75.2 billion. That's 92% of everything. Number 2, edge computing, $6.4 billion. Gaming, cars, professional graphics, all folded into one line. Say that again, slower. Out of every $10 NVIDIA earns, more than 9 come from data centers. Gaming, the thing on every NVIDIA billboard, the RTX cards your friends argue about, is now a sliver of that last dollar. So what's in a data center? Servers, Racks of computers. The physical infrastructure that runs every AI model, every large language model, every cloud service. And increasingly, they're full of NVIDIA chips. Part 3. Data Center. The real business. NVIDIA's data center chips are not graphics cards. They are AI accelerators, purpose-built machines for training and running AI models. The current lineup. Number 1. H100, the chip that made NVIDIA famous in AI circles. $25,000 to $40,000 per unit. Every AI lab on Earth spent 2 years trying to get their hands on these. Number 2. H200, upgraded memory, better for certain workloads. Started shipping at scale in 2024. Number 3. B200, the newest generation, Blackwell architecture, $30,000 to $50,000 per chip. A single rack of 8 B200s costs over $500,000. Analysts estimate the B200 costs roughly $6,500 to manufacture. NVIDIA sells it for roughly $35,000. That's $28,500 gross profit per chip, per unit sold. That's an 81% gross margin. That's not manufacturing. That's closer to what happens when someone has the only key to a door everyone needs to open. To put that in perspective, most semiconductor companies operate at 40 to 55% gross margin. NVIDIA is at 75% company-wide across every product line. That puts them in the top 4% of the entire global semiconductor industry. They're selling scarcity with a semiconductor wrapper. As of mid-2026, demand still outpaces supply. NVIDIA just guided to $91 billion in revenue for a single quarter. Not a company sitting on idle inventory. Companies are paying a year in advance for chips they haven't touched yet because there is no alternative. The software, CUDA. The chips are impressive. The margins are impressive. But neither of those is the moat. The moat, the thing that makes NVIDIA genuinely difficult to replace, is software. And it has a name, CUDA. CUDA launched in 2006. That's now 20 years ago. Today, more than 6 million developers worldwide write their AI code in CUDA. Every major AI framework, PyTorch, TensorFlow, JAX, runs on CUDA by default. Train a model, and your code, your libraries, your tutorials all assume CUDA underneath. 6 million developers, 20 years. That's not a product advantage. That's infrastructure. Think about it this way. AMD makes GPU chips too. Some of AMD's chips are technically competitive. The MI300X, for example, has 192 gigabytes of memory compared to the H100's 80 gigabytes. For certain workloads, it's genuinely better on paper. So why isn't every AI lab switching? Here's the analogy. AMD built a faster train. The problem? Every track in the world was built for NVIDIA. Every line of code an AI team has written, every script, every optimization, every custom library was written for CUDA. To run that code on AMD hardware, you'd have to rewrite it. Not tweak it. Rewrite it. That's months of engineering time. That's 6 figures in labor costs. That's production risk while your team is mid-migration. NVIDIA's GPU has to be not just better. It has to be better by so much that it's worth the cost of abandoning 20 years of accumulated code. That bar, for most teams, is never worth crossing. This is what economists call a switching cost.
the price you pay to switch from one system to another. And it isn't measured in dollars. It's measured in months of lost productivity, risk of system failures, and the time your engineers spend debugging instead of building. CUDA's switching cost is enormous, and it compounds. Every year, more code, more libraries, more reason to stay. There is no finish line where switching becomes easy. One more number. There are over 4,000 AI models optimized specifically for NVIDIA hardware. Not AMD hardware, not Google hardware, NVIDIA hardware. That's not a product advantage. That's an ecosystem. Part 4. Gaming. The origin. Gaming is where this all started, and it still matters.
$16 billion in revenue for fiscal 2026, up 41% year over year. NVIDIA now tucks it inside that edge computing line, but the gaming business is still very much alive. The GeForce RTX lineup dominates consumer graphics. If you have a gaming PC, there's a reasonable chance an NVIDIA card is inside it. GeForce Now, their cloud gaming service, is the streaming bet. Rent the hardware, stream the game. But gaming is no longer the engine, it's the foundation, the brand, the thing that taught NVIDIA how to build high-performance chips for 30 years before the world needed AI chips. Gaming built the engineers. Gaming funded the R&D. Gaming paid the bills while CUDA waited for its moment. And then the moment came. And gaming handed the keys to data center. Now gaming is well under a tenth of revenue. Still growing, still profitable, just no longer the engine. The question is, what's NVIDIA betting on next? Part 5. Automotive and Robotics. The long bet. 1% of NVIDIA's revenue, easy to ignore, which is exactly what they said about CUDA in 2006. Automotive revenue, first Y 2026, $2.35 billion. That's 1.1% of total revenue, up 39% year over year. NVIDIA's play in automotive has two parts. Drive Hyperion, a chip platform for self-driving cars, already adopted by Bosch, Magna, Aston Martin, and ZF Group. When a car needs to process camera feeds, LiDAR data, and sensor inputs simultaneously, it needs parallel computation. That's what NVIDIA builds. Jetson, a smaller, cheaper chip for robotics and edge AI, starts around $2,000 a module, the entry point for companies building humanoid robots, warehouse automation, drone systems. Jensen Huang has said publicly that physical AI, robots, and autonomous systems contributed more than $6 billion to fiscal 2026 revenue. That's his own estimate, spanning software and services across segments, well above the official automotive line. Still small, for now. Here's the thesis in one sentence. If AI is the muscle that makes robots move, NVIDIA wants to be the brain that tells them where to go. And they started building that brain years before the robot industry needed it. Sound familiar? This is the CUDA playbook. Again. Part 6. Why is NVIDIA worth $5.4 trillion? Okay, now we go back to the beginning. $5.4 trillion. How does a chip company get there? Investors use a number called the P/E ratio, price divided by earnings. It tells you one thing: how much growth is the market betting on? Here's how it works with a simple example. Imagine a coffee shop. It makes $1 million in profit every year. You're thinking of buying it. How much would you pay? If you think it's a stable, boring business, maybe you pay $10 million. That's 10 times earnings. If you think it's going to grow 30% every year for the next decade, maybe you pay $50 million. That's 50 times earnings. Real world is messier, but that's the logic. The higher the multiple, the more growth the market is betting on. NVIDIA's PE ratio right now is high, very high. The market is essentially saying, this company will keep growing at a pace almost no company has sustained for a long time. And there are two possible outcomes. If the bet is right, if AI demand keeps growing, if CUDA stays dominant, if every company keeps building data centers, then $5.4 trillion might look cheap in 10 years. If the bet is wrong, if AI hits a wall, if a competitor cracks the CUDA moat, if demand plateaus, then $5.4 trillion is the biggest single mispricing in stock market history. Both of those outcomes are plausible. Now the risks. Part 7. Risk, the geopolitics tax. NVIDIA's biggest competitor isn't AMD, it isn't Google, it isn't Amazon. It's a policy memo from Washington. Here's what happened. The US government decided that advanced AI chips were a national security risk if sold to China. So they started restricting exports. First, the H100 was banned from sale to China. NVIDIA responded by creating a downgraded version, the A800 and H800, specifically designed to stay under the export restriction thresholds. Those got banned too. NVIDIA created the H20, downgraded a second time. This one passed the requirements. Sales resumed. Then April 2025 arrived. The H20 got hit with new licensing requirements. Overnight. NVIDIA disclosed a $4.5 billion charge in a single quarter for H20 inventory and contracts that could no longer be fulfilled. Q2 FY 2026 projected hit from China restrictions, $8 billion. Jensen Huang eventually traveled to Beijing with the Trump administration. Some shipments were allowed to resume after negotiations, but the specific terms remain disputed across sources. The final score? Jensen Huang said publicly that NVIDIA's market share in China dropped from 95% to 0%. 95 to 0. That's not competition, that's erasure. And that market was worth somewhere between $15 and $20 billion in annual revenue. Gone. Because of a licensing decision. Not a product failure, not a competitor, a memo. What filled the gap? A Chinese chip company called Cambricon. Their revenue grew 4,300% in the first half of 2025. Turns out, removing the dominant supplier from a market is very good for whoever's left. Then it flipped again. By 2026, NVIDIA was cleared to sell a downgraded chip, the H200, to a handful of Chinese firms, with hard caps per customer. Analysts figure it could claw back up to $15 billion there in the back half of the year. So the market wasn't gone forever. It was gone until the politics changed. There is no CUDA moat against a government export ban, and no guarantee about which way the next memo points. This is the risk that a PE ratio can't price, because it's not financial, it's geopolitical, and geopolitics can change overnight. Every country where NVIDIA sells its most powerful chips is now a potential policy risk. Not just China. Any government, anywhere, that decides advanced AI chips are too strategically important to let flow freely. That's a new kind of operating environment for a semiconductor company. Part 8. The real competition. AMD is the obvious answer. So let's see if it actually is. You already know the switching cost argument. This is the part where we look at whether AMD's chips are actually good enough to matter. The MI300X chip has 192 gigabytes of memory versus the H100's 80 gigabytes. For certain inference workloads, running an already trained model, that matters. More memory means you can run larger models without splitting them across multiple chips. In some benchmarks, the MI300X genuinely outperforms the H100. Llama 3 405 billion inference, DeepSeek v3. These are real numbers, not marketing. AMD's roadmap is aggressive. MI325X, MI355X. They're not standing still. But a benchmark is not a business decision. When a company evaluates the switch, the benchmark is maybe 20% of the conversation. The other 80% is the switching cost we just walked through. AMD's software stack, ROCm, is functional. It's real. But engineers who've tried ROCm consistently describe it as unforgiving to configure. The gap between the benchmark numbers and what you actually get on a stable release is still meaningful. Now, custom chips. Google has the TPU. The latest generation, Ironwood, reportedly matches or beats NVIDIA on some tasks. Amazon has Trainium. AWS claims 30 to 40% better price performance on their own benchmarks. Both of these are real. Both of these are good chips. But here's the catch. Google's TPU runs on Google Cloud. Only Google Cloud. If you want the TPU advantage, you have to build your entire infrastructure on one provider. Most enterprise companies don't want that. Amazon's internal data from April 2024 showed Trainium at 0.5% of GPU usage on AWS, their own platform. That's the gap between a chip that exists and a chip that gets used. The hyperscalers, Google, Amazon, Microsoft, Meta, are building custom chips to save costs on their specific, predictable workloads. And it works for them. But those chips require tens of millions of dollars and years of engineering to design. A startup can't do that. A mid-size enterprise can't do that. A university research lab definitely can't do that. For the other 99% of AI developers, NVIDIA is the default. Not because they've been convinced, because there's nothing else that works out of the box. Part 9. The counter-argument. NVIDIA is not invincible. Here's what I think people get wrong in both directions. Some people say NVIDIA is untouchable, that CUDA is unbreakable, that this company will dominate forever. That's not how moats work. Every dominant technology platform eventually gets disrupted, usually not by the obvious competitor, by a shift in the underlying environment. What if the next generation of AI developers learns ROC first, not because it's better, but because someone makes it the starting point? Ecosystems can shift at the edges before anyone notices in the center. What if AI moves to the edge? Phones, cars, local devices. NVIDIA dominates cloud. At the edge, Qualcomm, Apple Silicon, and others have a real claim. NVIDIA's not there yet. And then there's the one nobody wants to say out loud. What if demand slows? Not a crash, just a slowdown. Companies start asking, what's the actual return on all this infrastructure spend? The order book doesn't collapse, it just tightens. And at a $5.4 trillion valuation, tightening is enough. None of these are predictions. They're possibilities. NVIDIA is the best-positioned company in AI right now. Best positioned doesn't mean inevitable. The CUDA moat is real. The switching cost is real. The backlog is real. But a $5.4 trillion valuation means the market has already priced in a lot of real. There isn't much room for error. Here's what I keep coming back to. 3 engineers sat down at a Denny's in 1993. They wanted to make chips for video games. They had no idea what AI was. In 2006, they built a programming platform that nobody asked for. NVIDIA didn't become an AI company. It was always a compute company. AI just proved it. 6 years after CUDA launched, researchers noticed. 16 years after, the world needed it. The $5.4 trillion is the market's answer to one question. Do you believe the next decade of computing runs on NVIDIA's infrastructure? If yes, buy the stock and wait. If no, or even if you're not sure, then $5.4 trillion is a very expensive bet to be on the wrong side of. Either way, the story isn't over. Not even close. Here's the question I want you to think about. NVIDIA's CUDA moat is 20 years old. It was built before most AI developers were in high school. What would it actually take to break it? AMD? Google? A new framework that makes CUDA irrelevant? Or something we haven't heard of yet? Drop your take in the comments. I'm genuinely curious what you think the timeline looks like. If you made it this far, you now know more about NVIDIA than most people who own the stock. Hit subscribe. New deep dive every week. See you in the next one.